Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to our latest episode of the Market Misbehavior podcast. Our goal with this podcast is to sit down with top market practitioners, money managers, strategists, traders, educators, authors, anyone we think has an important story to tell. Our goal is to learn about their own experiences through the markets, lessons learned in their successful careers in the financial industry, perspective, process, insights about how the markets are evolving here in September 2025 and for many, many moons beyond. Today, great guest, a repeat guest here on the Market Misbehavior podcast, Frank Cappelleri. Frank is a fellow stock charts contributor, a fellow CNBC contributor, has for years served as the chief technical analyst at Instinet, based in the New York area, and now running his own firm called CappThesis, where he works with institutional investors, also retail investors, to help them better understand the markets using technical analysis. Had a great conversation with Frank just about current market conditions. We have the S&P making new all-time highs again this week. We talked about the overbought conditions on both daily, weekly, and also another time frame that I'll let Frank explain why he uses, but it's an unusual one that we haven't featured much on our discussions. Talked about the relationship between stocks and cryptocurrencies. The S&P and Bitcoin often have been related very closely to one another, not so much the case here in September 2025. Talked a lot about trend following. Frank shared a chart using the GoNoGo indicators from our friends Tyler Wood and Alex Cole at GoNoGo Charts. A classic sort of trend following technique, combining a bunch of different indicators, really showing a risk on condition here. Talk about Darvis boxes, which is a technique you may not be familiar with, but when you see the chart of the S&P, just normal bar chart, and then you see Frank overlay what are called Darvis boxes, which is a way of sort of recognizing the push and pull of the markets, right? Sort of those, initial thrusts and then consolidations. Great way to just understand what's really happened to the S&P 500 off of the April low. Talked a lot about trend lines at the end on semiconductors and other charts, trend line breaks and what they mean, what some of the short-term weakness and now the bounce in semiconductors may mean for your portfolio. A fun discussion with a top technical analyst. Please enjoy this great conversation with Frank Cappelleri of CappThesis. Excited to be catching up once again with Frank Cappelleri. Frank's the founder and president of CappThesis. I've known and followed Frank's work for many, many years, and it's a pleasure, Frank, as always, to catch up with you. How are things your way? Okay.
Hey Dave, thanks a lot for having me. Can't complain. September, looking for volatility.
I mean, we're looking for volatility, but and we're going to get through some great charts that you shared with us. Are you surprised at this point? I mean, but toward late September, we've really just been in this consistent low volatility environment. We really haven't, as much as the markets felt uncertain and challenging at times, the VIX has remained very, very low. Is that surprising to you in some way? How would you think about it?
Yeah, I think it is. It's surprising to everyone. And it seemed like we're waiting for that to arrive, every month since this started.
Yeah.
In July, right? No 1% moves up or down at all for the month of September or of July for the first time since December 2019. Potentially have that again in September now, just 2 months later, right? Where volatility is supposed to start with everything that's going on. I think that was probably one of the biggest things that people were not expecting up to this point for sure.
Yeah, and that's a great way to think about it, right? I usually think of volatility in terms of the VIX. You have shared on social media a number of times, days over 1% or some threshold like that. Just the average day has been fairly quiet, I feel like recently, right?
Oh yeah, and we've seen environments like this before, and of course the one that really comes to mind is 2017, right? Which was the least volatile year on record if you just measure in terms of percent move off of a high. And I just find it interesting that, of course, that was during year one of Trump 1.0, where regardless of how you feel about him coming into that year, was like you potentially have the one of the most volatile presidents. And what do you expect to have happen? Not the least volatile year on record. And here we are again, coming after the tariff tantrum with like
Mm.
obviously the biggest amount of volatility since COVID, and comes into this or morphs into this uptrend that's even more consistent than we saw in 2021. I would argue.
Not how I saw this playing out for sure, especially given that noise in April. It felt like that was going to be the norm. It turned out that was just a fleeting moment, I think, for investors in 2025. All
Yeah.
right, let's get to some of these charts here. There's a lot to talk about. Obviously, the S&P once again pushing to new all-time highs here in September of 2025. We're starting with this is actually a 2-hour chart of the S&P 500. What is this telling us?
Yeah, I've been looking at this one a lot because it really gives you a sense that there is an ebb and flow to this, right? If we
Mm,
look at just the daily chart sometimes, it just looks really like nothing at all, just like a kind of a straight line higher. So this kind of shows it has been a series of ups and downs. What I've been looking at here is, and I think it's pretty well defined by the 14 period hour sign on the bottom, is that you've seen that the RSI get pushed around pretty easily, right? And that sometimes isn't the case, but the reason it is because just the two-way volatility has been so low. So you get a 4 or 5% move to the upside that creates an overbought condition. Same type of thing on the downside. But what's interesting now is that coming into today, that RSI was near 80. And so that's actually pretty high, even from a short-term basis. And we have a highlighted here. The last time that occurred was in early July. So again, coming into July, after a big move from the time before coming into earnings season, you would have thought back then, of course, it would get more volatility. Didn't happen. So once we got that 80s level hit, market didn't pull back, just went to the side once
yeah.
more, and then it rallied again. So I think no one will be surprised that we pause again here or pull back more. What will be surprising if something like this continues to occur, where you
Mm,
have these breakouts, upside targets hit, creates these overbought readings. Now we've had, we're overbought short term, daily, weekly at this point. So the setup is there for the taking for the bears, but you have to wonder how many times are we going to get burned expecting more of a pullback and it doesn't come. So I think this kind of gives us an idea how that can play out. And I always say that you're always looking for a change of characters. This is what it's been doing. What happens if the next, pullback is bought, but then we don't get that immediate new high again? That's when things could potentially change. Where Dave, of course, that lower high is being stages of potential bearish pattern.
it's a great reminder, right? So back here in July, I always tell people markets can correct in one of two ways. They can correct in terms of price, which is how we normally think of it, right? A big steep decline, like we saw coming out of the April low. But markets can also correct in terms of time, right? And just sort of stall out for a little bit. And that's kind of what happened in July. So I'm curious, Frank. So there are, and I might be off on a couple zeros on these numbers, but let's say there are millions of traders and investors that look at a daily S&P chart all the time, and there are probably hundreds of thousands that use the hourly chart all the time. I would say there's a very small handful that use a 2-hour chart with any consistency. What are the market conditions, or what's the moment where you bring this up where it feels like this gives you some additional color you wouldn't get elsewhere? Like what draws you to this particular time frame in a moment like this?
It's a great question, Dave. I think everyone has their own favorite time horizon. I was just
Yeah.
probably, I don't even recall this, but one day just like kind of playing around with different time frames and trying to see what could really give us an idea of things, almost like a swing trade type perspective,
Yeah.
right? And
Yeah.
this one seemed to kind of check all those boxes. And
Yeah.
so one of the first times I started showing like the 2-hour chart when things were starting to change in April to May. I guess one of the titles of the piece actually was when to use short-term charts. And the answer was now, because again, I'm always looking for patterns. You can't really see that when the market's going crazy like it was in April, even beginning
Yeah.
stages of that rally. But if you were to zoom in a 2-hour chart, start identifying these patterns when those start to work, even from that perspective, that's what can set the stage for bigger foundations to then get formed. And we also see it again better with the ups and downs of this oscillator as
Sure.
well. Again, if you're very long term, may not matter, but I feel that looking at this and the daily stats, this gives you kind of a sense when things may be turning before you really see it in the daily work.
No, that's really well said. And I mean, for what it's worth, it seems like a really good time frame to just explain what's happening to the market off the April low, and it gives it some clarity. And I like the use of the RSI at the bottom for sure. All right, so that's the sort of zoomed in version a little bit. Let's look a little bit longer term weekly chart of the S&P 500. So we're overbought on a number of time frames here, right?
That's right. And this is the weekly. And I thought this was interesting because, I've been comparing this comeback, and I'm sure others have as well, to both 2020 and also the late 2023 comeback. Just because 2023, 24, only because that morphed into a very consistent uptrend much more quickly than it did in 2020 and 21. And so just looking at how long it took both of those times for that RSI to get back to overbought territory. Now,
Mm.
obviously, it took much less time in 2023, 24 because we were coming off not even an extreme oversold level. So it took about 2 or 3 months there. Going back to 2020, 21, you can see that we had to go a long time almost to the beginning of 2021. S&P was up over 90% during that time and endured a number of extreme moves, right? Two corrections in that September and October that kind of prevented the R side of getting back up there. So that's the kind of the backdrop. But most importantly from this chart is knowing what happened after that. Every time you hear overbought, not every time, but it has a negative connotation, right? Especially after it's overdone. We know how much we're up off the lows. But what's very interesting about this chart is both in early 2024, when we first got that overbought reading, then again in 2021, what happened after that? Market didn't fall apart. In fact, it kind of like it marked a midpoint even to some extent. And we had then both of those times morphed into more consistent uptrend, especially in 2021. And I remember I was still, on a trading desk back then. The volume was out of control for a long time, even through the first quarter of 2021. That's when it really changed going forward. So that's what I'm looking at now. I think it definitely due for a pause, but I think this gives an indication that he could go further as well.
This is such a great chart, right? And I think, again, I often tell people overbought means up a lot, right? So don't be that concerned. I mean, that's a good thing, isn't that what we want? That we want,
Right.
assets to rise. That's the ideal outcome for most charts you're looking at. And this is a great way of just showing what happens after that, those overbought conditions. So, how? Of course, we've all been waiting now for months and months and still months for some sort of meaningful pullback. We've just never had it, but at some point, it would you would expect some sort of meaningful full decline. What's that sort of go-to indicator or signal or pattern or level that would tell you, okay, this is that pullback we've all been waiting for? What's kind of like your go-to chart to watch to not miss that?
Yeah, it's a great question. Well, I start and end my analysis with the classical patterns.
Yeah.
And one of the things that I always look for are just bearish patterns forming and actually playing out. And so from the
Mm,
S&P 500, if I go back and have shown probably 4 or 5 iterations of bearish patterns, and really any time the market pulls back, that could be the top, right? That could be the
yep.
head. You can go back and see the last one. And without that really doing more than just pulling back to support, of course, you can't really make the case. Now, that's impossible to pinpoint the top doing that. But at the same time, you can go back in history and see when things started to roll over, top started to work, failure to get back to new highs. And that goes hand in hand with bullish patterns failing too. And that's one of the things I was looking at, in December or January, where after 10 straight successful bullish patterns, mean their targets were hit without those breakout points being violated, 3 in a row didn't work. That
Mm.
kind of get a sense that things were changing, maybe getting a little extended. And so that's what I'll be looking for again now.
Great point. Go back to the basics. I like it. The pattern analysis, right? Why not? All right, let's talk about cryptocurrencies a bit. Now, Bitcoin, of course, there's been such a what's the word, divergence, I guess, probably for lack of a better term, of with the strength in stocks, we at times in history have seen quite a bit of strength in cryptocurrencies, particularly Bitcoin. It's really sort of becoming disconnected here in the last 6 to 8 weeks. Talk about this relationship a bit, if you could.
Yeah, I think that's a very important point. And only because, and we'll look at the longer term version in a second, but when you go back in history, as long as Bitcoin has been in existence for, the two are correlated. They're both risky assets, right? They go up. At times they don't, right? And so the key is trying to understand which is leading. And so in January, as we can see there, of course, Bitcoin top first. S&P started to float higher. We know that breadth was an issue then, but again, bullish pattern starting to fail a bit, and eventually everything fell back with tariff tantrums. We know it's different now. At the same time, you continue to see Bitcoin kind of struggle to regain its footing a bit, even though it's not really considered, part of the market. It's speculative, it's growth related. And I
Yeah.
think that's going to be a part. If you're thinking about large cap growth leading, I kind of put Bitcoin in that category. So this is one area within that kind of speculative growth, large cap growth of Bitcoin at least, that's not working at the moment. So one, two things can happen, of course. S&P can, catch down to Bitcoin if there continues to be a bit underneath the system. I wouldn't be surprised to see Bitcoin eventually, turn higher, but I don't think them moving in opposite directions for much longer is going to continue.
Yeah, this relationship has to something has to give here, right? At some point.
Yeah.
What's the when we look at the longer term time frame? What does that tell us?
Yeah, it's very similar. And you can go back and see sometimes one peak before the other. But in 2017, again, we just talked about the least volatile uptrend of the market. And that's when really Bitcoin took off, right? Water cooler stories and everyone started talking about it. And that's when it got to be just hyper growth when people experienced that. And they also experienced a crash afterward. So I think it has matured a bit. You're not going to probably see as much of that crazy outperformance. But at the same time, we know that on occasion, right, Bitcoin does catch a bid. And they always say, if you're not in it when it's going down, you're not going to be in when it goes higher. And seasonality wise, it really starts to work in October and November. So I think you're getting to that point where it will need to do something relatively soon to match that seasonal trend.
I'll never forget. I think just off the left side of your chart, I will never forget when the Bitcoin ATM went in South Station near our offices in Boston.
Oh, yes.
And I never saw anyone actually use the machine, and it was gone maybe 6 months later. But I feel like the line at the ATM was people taking pictures just to log the fact, oh my God, this ATM got there. But and going back, maybe I should have withdrawn some, I guess. What you know what I mean? How do you? I mean, when you're talking with your clients, and then you, at times have had more institutional clients. I know you have a really good retail following now, and well deserved. How are you encouraging people to think about Bitcoin, cryptocurrencies, often bucketed as sort of an alternative asset related to stocks in such a position of strength? Is it just a diversification approach, or is it really just driven by the charts in terms of how you're thinking about it?
Well, I look at number one, this to give us an idea about the risk environment. But if you really think about it overall, if people want trade ideas, you're just looking for the best opportunities. And those have been working up to this point. Just a few weeks ago, we started seeing some of the lesser known or lesser followed crypto starting to look well, like Solana, BNB, and those. And so they kind of took off before Bitcoin and Ethereum did. And so that could be a trade quick. But
Yeah.
looking in an aggregate, you want to see all of them, of course, moving together as well to give you a better sense of conviction for the space in general. But it is interesting in terms of like trying to understand whether there's going to be a bubble. And in terms of crypto, we've seen big moves, obviously get huge drawdowns. But one thing that hasn't come back yet are NFTs, right? I mean, that was insane. And if you talk to someone who didn't experience that now, like, well, that was a bubble, but that bubble kept on going. So I don't know what's going to be the sign now for crypto. That's not coming back, but that's
Right.
something to watch at least.
No, good points in there, Frank. And I love what you described about just, I mean, I think what you implied was sort of like if the trend is there, right? I mean, you want to be following that. Same could be said for gold. I get a lot of questions about gold and, should you own gold? And it's usually asked in the context of like a diversification tool, right? Should I have some percent in gold? And my response is usually more what you said, which is the chart of gold tells you it's something you should own, then I'm going to be a fan of that. And gold, precious metals obviously have done remarkably well so far in 2025.
Yes,
Um,
yes.
you've got a great chart here. This is using our friends at GoNoGo, Alex Cole and Tyler Wood's work with the GoNoGo indicators. What is this telling you? This is a weekly chart of the S&P with one of their indicators. What is this telling us here?
Yeah, I've really been a fan more and more of this work, and I find complements the pattern work well because this
Hmm.
captures trend, captures momentum. Now we don't know what's in there. And we're being told it's the best of the best indicators and moving average or whatever. But all kidding aside, it does a very good job of capturing trend changes. I think especially on the weekly. And so you can go back. I encourage any stockcharts.com, wherever that go no go has their indicators on, to go back in time and look at this, especially from the great financial crisis low, where if you have a momentum indicator or moving average, those take time to turn after some volatility. But once they do, they can tend to keep you in this trend for a long time. And we just have going back to 2020 there. And you can tell, again, we're not calling the lows here, but in terms of waiting for things to stabilize, once they do, you can see that those colors flip, from purple to green to blue. that just means everything is in line. And very similar to what we were talking about with maybe not waiting for the RSI, but once that RSI gets to a point where it's trending higher, hitting overbought, you still have a lot more to go. And so I
Yeah.
can't really tell percentage wise how much these have worked, but it really encouraged me as the market was coming back this time when it finally flipped. We're now at like week 15 or so of this. I think it happened in June. Then now we're 3 or 4 months into it, right? And things are still
Yeah.
rolling. And if you go back to some of these past examples, again, you can make the case that we're still a while to go. Again, maybe we're halfway through, maybe not, who knows? But again, using this as a complement to the patterns and the targets being hit has been really helpful.
No, that's well said. We interviewed Tyler Wood earlier in the podcast series and went through some of his indicators. I encourage people to check that out. But I would agree. And this, I mean, this is sort of an exercise in trend following, right? Just recognizing, particularly on the weekly chart, right? You're recognizing strength, and strength tends to beget further strength, which most signals we're looking at seem to be along those lines. So I have to ask this, and so we have obviously we're overbought in the short term, which often creates some short term pullback scenario or some sort of corrective move, but the long term stuff is all pretty good. Besides being overbought, are there any other warning signs that you're seeing right about now that tells you everything's great except for blah? What is that blah in your mind, or is there anything that concern? What keeps you up at night, if anything, related to the market?
Well, I think two things. Number one, you can be complacent in a market
Yeah,
like this. You come in, it's not like you're bored, but at the same time, more and more people are talking about it. And if you don't have a lot going on, nothing seems to really change it. That's when things, really start to maybe look different. And as you know, sometimes in 3 days you can wipe out 3 weeks. 3 weeks can wipe
yeah.
out 3 months, right? And so I think that's a big part of it as well. Not thinking about that and considering that, I'm sure we've seen some of these studies now about the VIX or volatility being so low for a long time. Eventually, obviously, that's going to pop. So it's
Yeah.
really difficult to time that, but I think we also have to understand this is a market. We know how it goes, right? We've shown all those periods that happened and we saw, 3 or 4 year, whatever it is, up in a row, but each one began after a big volatility event, and each one ended the same way,
Yeah.
right? So I think we have to understand that's probably going to happen at some point as well.
I think your comment, Frank, on complacency is spot on. And I always tell people, like, you can get away with so many bad habits during a bull market phase, right? And it's easy to feel really good about all the great decisions you're able to make, but it just takes one big downturn to wake up all of those issues, right? And just all of a sudden, all of those bad habits you've gotten away with, that's when it can really hurt you. So now's the time to kind of get your house in order, as it were. Let's go through a couple more charts here, if we could, with the time remaining, Frank. We're looking
Sure.
at the communication services sector, which all of a sudden in September has started to do quite well, with stocks like Alphabet gapping higher pretty aggressively. What are you seeing on the chart of the XLC here?
I'm just really amazed by how picture perfect this is, right? In terms of, if you're a fan of Nicholas Darvis and the Darvis boxes I talk about
Darvis
sometimes,
boxes, yeah,
right? This is his market,
yeah,
right? If you go back to when he was writing about, I think it was in late 50s, it was kind of a market like this. So it worked. Whereas you're just buying breakouts after it gets through a certain level and holding until you get stopped out. Well, guess what? Wouldn't have got stopped out at all just using that strategy here. So again, straight trading ranges, 6 straight trading box breakouts. And so I think it also shows that, again, if you were to remove these boxes, just looked at a chart, a raw chart, it would just look like this going up,
yeah,
right?
yeah,
Where this is not. It's just really much more sideways action in 3 or 4 days of a breakout and then a pause again. And
yeah,
so that's why, yeah, you can be kind of cautious and wait for it, but understand when you have those digestive phases, Dave, as you know, in an uptrend, the continuation patterns are much more apt to happen than a reversal pattern. So I think it's difficult for people to understand. We have recency bias, or at least in the initial stages of this, that
yeah.
anytime you have a digestive phase like this, you're going to roll over. But I think you have to respect this for what it is. Now, understand at some point, one of those boxes I'm going to color red, we're going to see a breakdown. And that's when it's
Yeah.
going to get interesting.
No, it's and when you illustrate it this way, and this is what I love about the Darvis boxes and this approach is you really see the surges that really create the uptrend are small periods of time where you have that acceleration, and it's really more of a stepwise advance than anything else, right? What for
Exactly.
those that are less familiar with Darvis boxes, you and I have talked about this before. Give us the quick primer. What is it that's fueling this illustration? How are you identifying these levels to pay attention to?
I think it's pretty easy. You identify where resistance stopped the advance and where support came down, and on
Yeah.
occasion it's not going to be perfect, but you can identify ranges. And I always put the current green box, but that could eventually get larger. There was one
Yep.
time, when the S&P in 2024, especially moving higher, it was just very easy to put that on. All of a sudden, again, after the election, in November, all the way through January, February, that box was the entire 3 or 4 months, right? So I remember putting it on X one day and be like, we know one thing, the next move is going to be huge,
Pretty
no matter
big.
what side it comes from. So I think
Yeah.
it also gives you the ability to be patient and wait for that break to occur.
No, I love that, and I'm just I mean, looking at the chart right in the middle, like July and August, while it feels like this market has just been lights out positive off of the April low, which it over the long term has proven to be, there have been periods, in this case, 6 weeks where we're just kinda sideways and in equilibrium before that next breakout, and I think that's a great way of illustrating it here. All right, semiconductors. We have to talk there. This is a group that, I mean, overall has obviously been quite strong. Has really accelerated once again here in September. You're featuring a unique trend line approach that I'd love for you to describe. So talk us through semiconductors here, the SMH.
Yeah, obviously huge leader, just on fire. And if you go within some of those stocks, still some of them are still breaking out. And I think
Yeah,
it's interesting because again, semis, you know, you have one way of viewing this, right? You're either loving video or you don't think it's going to roll over for the most part. But it's a leader, right? And I think it's interesting. Again, it went up so far, so fast, SMH, that at some point the pace was going to slow. And when that happens, what has to change? Well, the uptrend line they're connecting those lows to has to get undercut. And again, once that did happen the first time, there were, of course, many people talking about, well, that's it. You break that trend line, we're already above the highs, up whatever, 40, 50% bound to fall. Well, the pace did change, and we just talked about how we could have classified that as a trading box as well there the first time that first uptrend line was broken. But as we can see, not only did that uptrend line get broken, with 3 or 4 others, right? So now we're on uptrend line number 5. And again, this is very similar to what we saw in 2020. That's what that I think about how that next chart showing how that played out as well.
here we go.
Right. So
Wow.
there are 10 uptrend line breaks, with the last one being the one that obviously happened at the beginning of 2022. And it was one of the webinars I had recently. It basically went through 4 or 5 slides of this in 2020 every few months where another uptrend line got broken, got
Yeah.
broken, got broken. And it's like you just don't know. Where that's why pairing this together with maybe trading boxes or bullish patterns. But anytime you have a momentum break like that, it's going to look like a topping formation. Just digestive phase. You just don't know. Again, one of those is going to eventually move lower, but thinking that's going to occur before seeing more signs of momentum fading, will stop you out before you need to. But so I think look at the trend lines, understand it, but I never really rely on a trend line break as a reason to get out of something alone, I should say.
So first off, I'm noticing the obvious Seahawks colors, so I can only assume that's a gesture to me and our stock charts friends, most of which are based in the Seattle area. So thanks for that, Frank. That's very mature of you. I appreciate it.
That's
But
great.
I love this illustration, right? And that and Greg Morris, who's has written a number of really great books on technical analysis and trend studies, has said all new highs are bullish except the last one. And this
It's
reminds
true.
me of that one, right? It's like what
Yeah.
happens after that peak starts to matter, right? And you can see how things were different, sort of that change of character as you described there. So semiconductors. So overall, obviously, still showing quite a bit of strength here, and we'll see when that area potentially would break down. We've had a resurgence here recently in the growth space, right? And You had that stretch in August where technology starts to underperform. We've got other sectors, mainly consumer discretionary and communication services, starts to surge. Now all the growth sectors are kind of back on offense. What about those other areas of the market, right? I'm remembering there are 8 other sectors we could talk about. I'm curious,
Right.
I mean, particularly in areas like financials, which some of those charts still look, I would say, fairly decent in industrials. Are there areas more in the value or defensive space? Anything that has looked at that you feel, even though the market is still strong, here are other pockets that are potential opportunities?
I've been looking at healthcare for a long time, and
Yeah,
obviously that's been really tough over the last few months. You've seen pockets
yeah,
of it happening, but recently, I think that those patterns are starting to mature a bit more. And I think part of it could have been when UNH got the big injection of cash from Berkshire Hathaway, and that kind of really changed things a bit. Even that chart looks very interesting as well. So I think
yeah,
a lot has to happen still, but if you look at some of those charts, especially biotech, Dave, as you know, or some pharmaceuticals, they're still coming off the highs from 2000 23, 2021 even. And so
yeah,
have a long way to go. And, if we're running screens and looking for charts that have momentum and your all-time highs, these are never going to hit them, obviously.
yeah.
But shouldn't ignore them because you could get some really strong moves from pretty substantial bases and then see how those play out on the way up and the way up. So I think the opportunities there are really interesting still.
No, that's well said. And I'm glad you mentioned healthcare. Healthcare is one of those sectors I feel like a lot of investors kind of have a blind spot. They decided a long time ago it's a sector that doesn't do well, and it's been true, right? I mean, it's been
Right.
struggling at times, but there have been some compelling charts in there. I think to your point. So good reminder to find good charts wherever you can. Frank, this was awesome as always. I mean, what a pleasure to talk through some charts and some perspective here as we continue this relentless bull market of 2025. Where can we point people to learn more about you and your work?
Oh, thanks, Dave. Just go to CappThesis.com and you'll see some links there to both, premium content and also a link to our free Substack newsletter, Cap Notes as well.
CappThesis.com. Frank, great to chat with you. Best to you and your family, and we'll talk to you again soon. All right.
Thanks so much, Dave. This was great.
It was a fun conversation. I hope you enjoyed that catch up with Frank Cappelleri of CappThesis. That technique called Darvis boxes. Frank is one of the few technical analysts I've seen that employs that regularly. It really is a fantastic way of illustrating how the markets actually move, right? And what happens is, as human beings, we often sort of have a preconceived bias. We tend to detect patterns often that aren't there. And I find the Darvis boxes are really good about just sort of, really looking at how the market has moved. And you can see there was a real stepwise motion in 2025. There's a relatively small, sections of that chart where it's really an upside surge. The rest of the time is just sort of digesting and consolidating. That's certainly how it's felt here for the S&P 500. At the beginning, his warning about the overbought conditions, what that means in the short term as a potential pullback, but also some of the long-term strength, I wholeheartedly agree with. I think that's a great way of thinking about overbought conditions. As I mentioned to Frank, overbought means up a lot. A lot of people sort of incorrectly think that overbought is a very bad thing. Often ends up being a good thing that is proven out over time. Great conversation. Thanks again to Frank Cappelleri of CappThesis joining us from the New York area here this week. As a reminder, if you want to learn more about some of the tools and techniques that we use today, things like trend lines, moving averages, how to understand different market relationships from a technical and behavioral perspective, our Market Misbehavior premium memberships may be the perfect option for you right about now as we get into the fall season. 3 great benefits of the premium membership. First off, you'll have access to all of our members-only reports, like our weekly flight plan, our main investment report, where we focus on what we learned in the week that just happened. We look forward at the week to come and identify key levels, patterns, and signals we're looking for. Also, our monthly chart review, where we apply a proprietary market trend model to a series of ETFs and asset classes. Second benefit, all of our virtual courses are available on demand at your own pace. Flight School Behavioral Investing is where we explain behavioral investing techniques, combining behavioral finance and technical analysis tools, sort of the way that I've learned to use these tools and techniques over the last 25 years in the financial industry. Finally, you'll have immediate and full access to our members-only community where you can ask questions, you can learn from other like-minded investors, and you'll have me in there every day answering questions, sharing charts, getting the discussion going. We'd love to have you be a part of that small and growing community as well. For more information, go to marketmisbehavior.com/premium, and don't forget to use the code PODCAST when you check out for 30% off your first 12 months on any plan. That'll do it for today. I'm Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts.